Hey everyone, and welcome back to the channel where we demystify the complex world of market mechanics. Today, we're diving deep into a specific hard-to-borrow stock that's caught our attention due to its exceptionally high cost to borrow. We're going to break down exactly why BJDX Inc., ticker BJDX, is showing up on our radar and what that could mean for traders. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Show BJDX chart. Let's zoom in on BJDX, BJDX Inc. This company operates in the healthcare and medical devices sector, focusing on diagnostic solutions. Specifically, they're known for the Symphony technology platform, which includes an analyzer and single-use protein detection cartridges designed to provide crucial measurements of diagnostic biomarkers in blood. With a market cap of just $1.01 million, BJDX is a microcap player. Looking at its recent price action, BJDX saw a slight dip today of 0.94%. However, over the last 5 days, it's actually up plus 6.38%, though it's down minus 9.48% over the past 30 days. Volume-wise, today saw 166,300 shares traded, which is significantly lower than its 30-day average volume of 9,506,176 shares, making its relative volume for today practically zero compared to its typical activity. What is cost to borrow and why it matters? Before we get further into BJDX, let's quickly clarify what cost to borrow means, especially for those new to this concept. When you short a stock, you're essentially borrowing shares from a broker to sell them, hoping to buy them back later at a lower price for profit. To borrow these shares, you pay a fee similar to interest on a loan. This is the cost to borrow, or CTB. If a stock is hard to borrow, it means there are very few shares available from brokers. The scarcity drives up the fee. Sometimes, as we'll see with BJDX's annualized fees can climb well over 100%, even several 100%. A high CTB indicates strong demand to short a stock, but also that shares are scarce, making it an important signal for potential short squeeze scenarios. Why this stock is hard to borrow right now. Display CTB numbers on screen. So, why is BJDX appearing on our hard to borrow screener with such intensity? The main reason is its astounding cost to borrow fee, currently sitting at 745.4% annualized. Yes, you heard that right, over 700%. This incredibly high fee immediately flags BJDX as a stock with extreme demand for shorting, coupled with a severely limited supply of shares available to borrow. Our data shows an estimated float of just 0.9 million shares, which is a very small number. While we don't have current data on the exact shares available to borrow or its CTB momentum, this astronomical fee strongly suggests that available shares are either extremely low or non-existent at many brokers. For context, our internal composite squeeze score, which combines various factors like CTB, float, and volume, gives BJDX a score of 40.5 out of 100. It's crucial to remember that a high cost to borrow does not guarantee a squeeze. It can also signify that short sellers have very strong conviction in their bearish thesis, even willing to pay exorbitant fees to maintain their short positions. Squeeze mechanics explained. Chart animation of short squeeze. Now, let's talk about the mechanics of a short squeeze. Imagine a situation where many short sellers have borrowed shares of BJDX. If the stock price starts to rise, perhaps due to positive news or increased buying pressure, these short sellers begin to face significant losses. As the price climbs, their brokers may issue margin calls, forcing them to either deposit more capital or, critically, close their short positions. To close a short position, you must buy back the shares you initially sold. If many short sellers are forced to cover simultaneously, it creates a cascade of buy orders. This surge in demand pushes the price even higher, which in turn triggers more margin calls and forces more short sellers to buy back. This creates a powerful positive feedback loop, a short squeeze, as the limited supply of shares for a microcap like BJDX means even a moderate influx of buying can have an outsized impact on price. Dilution risk check. An important factor to consider for any potential squeeze play is dilution risk. Dilution occurs when a company issues new shares, increasing the total number of shares outstanding. This can significantly devalue existing shares and effectively negate any upward price movement from a short squeeze. New share offerings, often seen in SEC filings like SMINUS-1s, SMINUS-3s, or 424Bs, can flood the market with supply, making it easier for shorts to cover their positions or even open new ones. For BJDX, we've found no recent dilutive SEC filings in the last 90 days. Additionally, there have been no recent reverse splits in our look-back window, which can sometimes precede or be used to facilitate dilution. This absence of recent dilution is a positive sign for any short squeeze thesis, as it removes a major potential headwind. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. So, if you're tracking BJDX, what should you keep an eye on? Highlight volume first. Watch for significant volume surges, especially if today's unusually low volume changes dramatically. A sudden spike in buying pressure relative to its average trading volume could signal increased interest. Highlight price level second. Monitor price action for breakouts above key resistance levels. Sustained upward momentum, particularly on high volume, would be a critical indicator. Third, keep an eye on any updates regarding the availability of shares to borrow. If that number suddenly decreases or if the CTB climbs even higher, it could tighten the squeeze. Finally, any news or developments from BJDX itself, perhaps related to their Symphony technology or business milestones, could act as a catalyst. BJDX, BJDX, Inc., with its incredibly high 745.4% cost to borrow and tiny 0.9 million share float, is certainly an interesting stock appearing on our hard-to-borrow radar. While these metrics point to potential squeeze conditions, remember that due diligence is key. The absence of recent dilution is a good sign, but ICTB alone is not a guarantee. We'll keep an eye on BJDX and other hard-to-borrow stocks. If you found this breakdown helpful, please hit the like button, subscribe for more in-depth analyses, and let us know your thoughts or any questions about BJDX in the comments below.